Hey, Tyler, thanks so much for joining us today on the podcast.
Awesome. I'm excited to be here.
I was really interested in this conversation. I know we've had it on the books for a while, but you guys have taken an interesting approach to the digital transition in terms of, I think, what you're calling VirtualBank. I'd love to hear a little bit about the story of what you guys are doing in that vein and why, because I think it's quite different than what others in the space are doing, and I think it's a really fascinating approach.
Yeah, I'm happy to talk about that. And you're right, it is an exciting thing that we're doing. It's a little bit different of an approach, and it's something that we're pumped about where it's going to take us as a company potentially. So VirtualBank, just to sort of set a little bit of groundwork here, is a brand that's a division of First Horizon Bank, really part of the bank, just a separate brand designed to be an online-only brand. VirtualBank.com is the website for that. And it's actually a brand that has been around for over 2 decades. And so it started as its own independent bank called VirtualBank, and through a series of mergers and all sorts of things along the way, eventually landed with IBERIABANK, which is merging with First Horizon. It has legally merged with First Horizon in 2020, and in 2021 we're doing the conversion of that merger. So we started off with this opportunity by virtue of a merger. And in 2020, around the time that we were finishing up our legal merger and getting ready for the new organization to kick off, we looked at VirtualBank, knew that we had some ideas on our roadmaps at First Horizon, and then IBERIABANK was also looking at some of these things for long term around looking at new cores, looking at new capabilities, moving things into the cloud, riding on API-driven rails versus more ETL type processes. Like, what is that modernization going to look like over time? And we kind of had the realization, well, we can convert VirtualBank to the same core as everything else, or we can take advantage of the opportunity. It's a narrower scope of products, a specific set of customers who expect to interact with us digitally pretty much only. We don't have branches for VirtualBanks. It's a digital ecosystem. So let's take advantage of that opportunity and the necessity of a conversion and go look at doing some modernization there now rapidly. And what we did in that process is assessed the field of players and talked to a lot of different people, and then did a conversion of VirtualBank that we successfully did in July of 2021. Converted VirtualBank to a cloud core, which is Finxact, which many people are probably familiar with, a cloud-based servicing layer called Savannah, which really integrates well with Finxact, and then a new online banking, online account opening website tool called Aperture, which also has interacted with that ecosystem in the past, and converted our clients onto it. There's a litany of other pieces to the puzzle that are also parts of this that are helping with everything from item processing to ACH money movement to deposit capture, and all of those things are captured with other tools and kind of building out the ecosystem. But those are our 3 core components, and we partnered with Wipro and built this out. We actually, one of my favorite parts of this that reflecting back on is truly something else. We went 370 days from the first meeting with Finxact to go live. 227 days from contract signatures to go live. And so
That's
we
fast.
obviously put a really good team together. People were really focused on it. We were able to do some of between day 370 and 227, we did a lot of planning, obviously. But we really moved fast and efficiently and stayed very focused on what our true objectives were in setting the first steps of what could be a bigger modernization opportunity for First Horizon.
How do you think you were able to move? I mean, I typically see a lot of institutions in the financial services space that have goals to move quickly. I've had many a bank tell me, we'll be the fastest you've worked with. And then, internal processes set in, committees get involved, and they end up being typically slower to execute than most of the business leaders want due to just internal structures, committees, approval processes, et cetera. How do you think you guys were able to kind of be faster? I think you told me that you signed with Finxact later than a couple companies, but went live before some of them because you were faster through the pipes. And I'm curious if there's any advice you have or things you felt helped make you more effective at driving that process more quickly.
Yeah, this is something we've talked a lot about internally, talked with others about, that we know are going through similar journeys as well. And for us, there were a few factors. One, and it can't be overstated, is we knew we had a narrow scope of products. So we offer consumer money market and CD products. We didn't try to bite off every product in the bank for the first iteration of this. We knew where we were starting, and we were really focused on that. So that does clarify things a bit. The other reality is we have a conversion in 2021. So there was a little bit of necessity as the mother of invention, or necessity in this case was the mother of getting this done on time and on schedule. And so that helped us stay focused. And really all that did is just provide clarity along the way when you need to make a decision of what can help you make decisions. And then lastly, we had some really good principles that we set out back in 2020 when we were planning all of this, that we stuck to, and we came back to. When you come to a fork in the road, think about simplification, right? So don't over-engineer something, because the odds are we're going to learn a lot of lessons in the first iteration, and we're going to need to improve over time, and we're going to need to add new capabilities, and we're going to learn a lot. So let's not over-engineer our first processes so that we have to go undo that later when we want to change our approach a little bit, or when we want to add a new tool in. Let's focus on take a simplification process if you can. Now, obviously, do it correctly first, but where possible, simplify.
Yeah, I like that.
And so we really stuck to that, and we tried to model that when we made decisions. So one of the things that we would make decisions for our project team as a team in meetings together, and be very transparent about what we're thinking through. And sometimes that means, okay, we're not going to roll out with this capability when we go live, or we're going to wait, and that's going to be a phase 1.1 or 1.5 versus 1.0, because that is going to add risk to the testing process. And why would we want to do that when we don't have to add risk to our process? We'd rather put more rigor into testing and test things well versus less rigor to test more things. So we did that over and over and over again, and we had a really good line of communication also with executive management. I think this is the last factor that helped a lot, is we've structured VirtualBank under, it's reviewed by an oversight board that has our COO, CFO, head of business transformation, who's my boss, chief digital officer, and head of regional bank strategy and delivery. So you've got people from all different aspects of the bank kind of keeping an eye on this, asking questions. We also worked really closely with our merger project office, because this is part of the merger. So you've got another set of folks in there, chief risk officer. You've got some other folks from both sides of the bank sitting in that. So you're getting perspective from a lot of different people, being very transparent. Everybody's aligned on what we're trying to accomplish. So you get those critical questions out early, work through them, get clear answers, and keep pushing forward. So good clarity purpose. I mean, the last thing too, and this is probably the most important, a really strong team. We were very fortunate, the people that we've had working on this project. We've had a mix of legacy Iberia Bank, legacy First Horizon Bank. Obviously, the Wipro team has been phenomenal, and then our vendor team also has come to the table and rolled up their sleeves and been a partner. The first meeting we had, we said we want to build something that we can all be proud of, and that goes for the vendors as well as for the bank. It's not just about the vendors are kind of giving us a service that we pay for, and that's the end of the conversation. That we want to all be proud of this, and by the end of the project, you sort of hear people talk about like VirtualBank as their baby, and they're so proud of it. And they're people that don't work for the bank, but they've been so ingrained in the process and thinking through questions and helping solve problems that they feel connected to. And I think that attitude that everybody bought in on made a big difference when you had to make tough decisions, or when you had to work extra or whatever to move quickly.
I like that. Strong team, keep the scope simple, and iterate. And I think and support from the top, I think, is critical, because it's different having the CFO or the chief risk officer involved in a risk committee that's a layer. But the other thing I like about this, and I'm curious if this was internal or external, is kind of a forcing function. You said we knew we had a 2021 conversion, and sometimes like a brick wall is a pretty useful useful forcing function. Was that something you had decided internally? Was there a reason that you had? I'm kind of curious, because I've seen both real forcing functions, like with the market, external reality, and sometimes you just kind of create them out of whole cloth because the team needs a deadline with some sort of rigidity to it to run towards. And I'm curious if that was like more of an artificial thing you guys created it to drive motivation, or just a reality you were dealing with.
It's the bigger merger conversion for Iberia
Yeah.
Bank and First Horizon, because this is coming over from Iberia Bank. That conversion is in 2021.
So it's got to go somewhere.
We wanted VirtualBank to go. We wanted VirtualBank to go first, ahead of the rest of that conversion, so you didn't have these like commingled events where you're converting VirtualBank at the same time everything else is converting, and you're just sort of taking your resources and spreading them more thinly. You wanted to be able to have focused on both. So that was the wall. That was the forcing function. The bigger conversion.
Yeah, they are useful though, and I have seen them artificially created for these purposes, which is interesting.
In this case, it was not artificial.
Yeah, it's nice if you don't have to make it up, but it can be valuable as a tool because it is very useful. I want to ask a little bit about, you've kept VirtualBank as a separate brand, and one strategy you could have taken at point of conversion was, and I see many banks, most M&As, right, go this way, where you end up wanting to have a singular brand. And obviously, I think you're doing that on the Iberia First Horizon side. But you left VirtualBank as a digital bank on its own. And I'm curious the rationale for that, because I think many people would go, hey, we need to make our core offerings more digitally enabled, but we don't want to have a different thing that's digital only on the side, that's not integrated. And you guys did not choose that path. We talked a little bit about the practicality of getting there and the integration, the conversion. But strategically, why was that the path you guys thought was useful? Like, why did you go down the path of keeping VirtualBank a separate thing, a separate brand, a different core than what you're doing for the larger bank?
I mean, the way I think about it, and it's probably just a function of my own background in banking and things I've done in the past, I sort of think about it as a regression function of how many variables can I control for? And by commingling all of this together, I'm introducing new independent variables, and I don't know what's causing what always. And so with VirtualBank, because we really are about 95+% on different tech than the rest of the legacy bank, and with limited, obviously we've got things like general ledger integrated, and some of the risk and fraud functions we're integrated with tightly, because those you need at enterprise scale for an $87 billion bank. Those are very critical. But within the ecosystem, we're really self-contained there. And so that gives us clarity into what we're learning and what it's related to. So we're not ever confused on, are we learning something because this client interacts with the branches over here, and then they use this digital channel, and we put them into the new app also. We're learning things that are specific to VirtualBank. And as I mentioned earlier, because we have this oversight board that includes leadership from our regional bank, includes our chief digital officer, and is interacting with leadership across the bank, we're able to find ways to learn lessons that are applicable to the rest of the bank. So we're learning the core lessons, right? We're learning about cloud cores and real-time 24/7 cores. We're learning about new servicing systems. We're learning about new online banking platforms, obviously. But we're also learning about doing business on those things. We're learning about integrating new tools into those things. And some of those tools may have immediate use cases in other business lines, and we can learn them in narrower scope at smaller scale, and then say, yeah, you should go do that big project around this, at least based on what we've seen so far. It makes sense. Or, you know what, actually it just made us less efficient, and it was a little bit harder to do than we thought it was going to be. We might want to keep looking for a better solution, and we can learn it in a more narrow scope there. And that keeping that open conversation going with leadership across the bank is just as critical as having VirtualBank built out in its own box to learn that.
I really like that idea of limiting your scope so you can move more quickly, because I do see one of the things that large banks, as they go through transition to digital, it's like there's so many things you have to do. It's hard to learn and control and move quickly because you got so many products to bring. So I think that's a really interesting approach that would probably allow you guys to move much more quickly. So I'm kind of curious, two things on that front. The first is, what's the vision for bringing new products into VirtualBank? You talked about mostly depository accounts being kind of the core history of the VirtualBank customer base and the current product offering. Where are you going in terms of what you want to make available through that offering and the time frame for expanding into, is it going to be everything a bank could be as quickly as possible, or is it going to be a more, tempered approach to rolling out over time? So I'll start with that one. I've got other ones, but I'm kind of curious, where are you going with that?
You're trying to transition to your leaders in lending, I guess, is where you're trying to go.
Well, it doesn't have to be, but yeah, I am curious, like what your strategy is to move beyond, because I don't think you would stand this up just to just to keep a bunch of DDA accounts around and maybe try and grab some more deposits, you're going to do something bigger. So I'm just kind of curious how you think about what that is and what the kind of roadmap is for moving into more products.
Yeah, so there are three big strategic buckets for VirtualBank. One is that it's an online liquidity tool, right? It's what it's been for the last 21 years. And so we have that. We didn't give any of that capability up. As with most banks, the banks have lots of liquidity these days, so that's less urgent of a strategic thing, but the tool's still there. We didn't reduce our tool set at all. The second piece is what we just talked through a lot, which is sort of this opportunity for us to develop the infrastructure of the future for the rest of the bank or parts of the bank or specific use cases. The third piece is building a true digital-only vertical. There are a segment of clients who expect to interact with a digital bank, who don't go into branches anymore, or who have a different expectation for what their interactions are with a bank. And we want to think about what it might mean to deliver services to them. We're doing a lot of work in the second half of the year in 2021 on different versions of how that can play out and different roadmaps for the product. So we've got kind of a green field here where, do we pivot any of the product set in any particular direction to align with specific niche audiences? How broad do we want to appeal out of the gate? And what kind of roadmap does that look like for the 6-month, 18-month, 5-year horizon on what we can do? And we're actually doing a lot of work around that right now. So I'm being somewhat circumspect because the work is ongoing, and being somewhat circumspect because whatever I say now will be wrong in 6 months, almost certainly. And so I don't want to have to reverse course. But suffice it to say, that third bucket is really thinking about product roadmap. We're already working on new capabilities being introduced into VirtualBank this year that were not there previously, that don't currently exist at scale across First Horizon, that we'll be introducing later in the year that give us this kind of first glimpses of really doing some unique things because we're digital first, because we have a real-time cloud core, because we're able to integrate so tightly through APIs across our online servicing and core platforms. We're looking at introducing some things that will look like that. And not so much product but services, but also product over the long term as well.
Yeah. I like your focus on speed and keeping your optionality open. I was reminded of the old saying, was it no battle plan survives first contact with the enemy? Whatever you say is, I think maybe we need to revise it. No go-to-market plan survives first contact with the customer. Maybe I don't want to call a customer the enemy, but it is true that you have your plan and then you go to market and. Yeah.
Isn't that paraphrasing an old Mike Tyson quote about getting punched when you get in the ring?
Yeah, that's right. It's there. I think they're all kind of saying the same thing. But once you get out there, you got to react to what you see, and it's an interesting strategy. How much do you think of your learnings, and how intentional is it that the learnings you have in the context of VirtualBank have an impact on the strategy or decisions that would be made for First Horizon more generally? Because I imagine you can be a separate thing that is a virtual bank that's not all digital, but not sharing its insights. And then there's a model of this where you're kind of the sharp end of the spear for things that maybe the broader First Horizon bank wants to take advantage of and learn from. And I'm curious if that's strategically where you're going, and if so, how you think about facilitating the learnings from one to the other.
It very much is about sharing the learnings. That is core to what we're doing. The other thing I should say is we are a sharp end of the spear, not the sharp end, because you look at our product set being narrow, we can't cover everything in VirtualBank. That's not, you can't build a whole second bank within the bank. And so you've got a pretty strong function set there, but you don't have everything. And we've got teams that are doing things on the treasury management front, with API banking there. We've got our mortgage team has done some really front-footed things in digital interaction. Obviously, our digital team, really across the bank, that are doing things that are very front-footed as well, that don't always have overlap with what we're doing. So I want to say that because this is a company ethos thing of how we can all learn each other and stay in contact with each other as much as it is a virtual bank thing. So the answer to your question is it's very much about that communication back and forth. I mean, when we went live, shocker, we've had not zero complaints. Like, some people don't like change, and that is probably the least surprising thing I've said the whole time. And so you get an email and someone said, I liked the way this used to be in online banking. Very common thing. So one of the emails that we got, I could tell the way it was written. We haven't gotten an overwhelming number, but we've received some. I was reading them, and the one was written, and I was like, I think this person works in software development. They're using words that only people that work in software development would use. And so I just called her, and we had a really interesting conversation about her CX experience, and I kind of told her, like, here's what we're working on. Here's what the future looks like for VirtualBank. Your account is basically unchanged, but let's talk about where we're headed. I would love to include you in some CX labs that we're doing. So it was a really positive conversation, and she was very appreciative. Reached out immediately to our head of CX right after that for First Horizon and said, Jeff, I would love to make sure that we have this on the roadmap, and let's include this client in those conversations. And so Jeff is like, yeah, here's a set of ideas I have that we've learned from other areas about doing CX labs or doing implement monitoring or whatever else. And we can apply those to VirtualBank because we've already learned some lessons. And also, by the way, I've been really thinking about this. Can we start to look at some of that at VirtualBank for the first time and see if it applies for other parts of the company? So that was a really good microcosm of, we had a customer that had a question and we talked through it. I wanted to loop in CX. We got learnings from CX. CX had some ideas that they wanted to start with VirtualBank, and that's the kind of model that we'll have, I think. There are others that are more technical or systems that we want to try that look as well.
Yeah. Do you have a more like a structured or formal way to share that feedback through regular sets of meetings? I always wonder if, it's great when you have a relationship with Jeff, not me, Jeff, but the other Jeff, right? And you can give him a phone call and you think to do that, but it's also easy as the organization grows, that customer idea comes in, it gets lost, it doesn't get shared. Again, having the pipes kind of built that facilitates that is important. Have you thought about ways, or do you have structures for kind of ensuring that ongoing dialogue stays healthy and steady?
Yeah, the first one is our oversight board and who's on that oversight board. Again, because you have cross-functional people there, a lot of what that group does is says, hey, have you talked to this person about this person about this? And then it's also that next round right outside the board of stakeholders that I just stay in regular contact with. The other half of my job, I lead VirtualBank, but I also lead fintech strategy for the company. And so that half of my job is really about having those conversations with lead teams and leaders and executives across the company to know where our opportunities are, know where we want to look for fintech solutions that we don't have today, and spending time there. And so, that's a lot of time with our CRO, our CMO, those types of people, Jeff, our CX, our head of CX, other teams like that from the commercial bank, specialty bank, whatever the case may be. Those conversations also lead to conversations about the virtual bank. So there's a little bit of just a natural conversation, but because of the role both that I sit in and the way our board is structured, it's opening those doors in a very formal way of, you need to talk to the CMO about this, and you guys work together on how you might both try some new marketing things and think about the niche targeting for VirtualBank long term as we do product development. And also, are there things the marketing team wants to learn from VirtualBank that, do an A/B test of what we're doing with digital marketing, First Horizon, and then do a B with VirtualBank. There are lots of opportunities.
There are lots. So you opened the door to a whole other area of conversation, Tyler, which I like we're running out of time, but you said you're head of fintech strategy as well as running VirtualBank. So talk to me a little bit about, from a fintech strategy point of view, what are the big areas you're focused on, challenges that the bank you're looking to address, or opportunities you see? I feel like it's there's a lot of stuff going on in fintech. Even today, there's some major acquisition going on in the fintech space. So I'm just curious, what do you see as the big opportunities when you look out strategically? What are the kind of categories of stuff you're focused on as the big opportunities for the bank?
Yeah, so I'll hit a couple things on this. First of all, the way we approach this question is sort of three broad buckets around fintech. One is venture, and so we're part of AP Ventures Alliance, as well as doing some venture investment of our own that we've done in some one-off cases. We also look at Fintech Partnerships as a tool for solving problems. And so I always tell them my thesis here is probably we're not encountering problems for the first time. And I'll go a step further and say probably somebody built a company around solving this problem. Let's go find them and talk to them. And so when we have something that we're working on, whether it's infrastructure, client experience, or anything in between, is there somebody that's built a company around this? And in the best cases, it's somebody that we're invested in or thinking about investing in or making that investment. And we sit at the table from that point of view. We sit at the table from, we need your services and would love to have a contract. And oh, by the way, we would love to sit down with you and think about how you're developing your roadmap and spend time talking about that. So we try to get that multiplicative value. Then the last piece is we do a little bit of banking as a service as well. And so we have some bankers that really specialize in that and have been able to have a few fintech clients that need that. And so we also have that as a part of our strategy.
That's
the core of your question.
Three broad buckets of stuff that you do.
Broad. Yeah, it's really broad buckets. The third bucket there, we have this banker team that really focuses on that. So that's certainly more outside of my scope. The second one, we really have a group of people across the bank that are working together and looking at the technology side, the CX side, the customer sales side, whatever the case may be, and talking about like what we need from fintech. And in the first one, we stood up a venture subsidiary and have an investment board and that kind of thing as well. So it's a collaborative process with a lot of people.
Yeah.
From your initial question of like the big trends. For me, it's sort of taking the next step on what we get from a lot of things. So the last few years, there's been a lot of work around data. There's been a lot of work around insights. Now I think we're getting increasingly, and maybe this is happening faster than I realize in some places, into actionable insight. And so taking that data and taking the models that people have been able to put in place, whether it's citizen scientists or products that are really built out with really sharp AI, but then turning that into actionable things on the ground, whether it's for bankers meeting with clients or bankers in the back office knowing where to put their energy and reviews, or for clients actually. And I've seen several companies come up lately that are doing a lot of work around this, driving insights to clients that imply an action that can help a client really do what they're trying to do, which is have better management of their money and understand their financial situation better. It's sort of foundational, but because we have these data layers now that a lot of people have put in place over the last several years and understanding around the modeling of that data, you're now getting into this next phase of that. The other space that I think is really interesting, and there's a couple of companies I'm really excited about that are doing great things here, and it's in risk space. And I think there's a lot of opportunity there. Look, what we all know is every time we get smarter, the bad guys also get smarter, and they think about ways to take advantage of fraud or do something negative to our clients or to banks or whatever. And there's so much opportunity there for companies to help solve that problem, identify issues before they're issues, help clients. It kind of goes into that actionable insight phase a little bit, help people understand what's happening and what matters the most. But really focusing on bringing data together from outside sources that can be used to make better decisions on the front end. Or identify things more quickly. There are a couple companies that are doing smart things that I'm excited about, but I think there's going to be a lot more. And then the last one is broadly in the commercial space of really solving for big commercial relationship type things. There's some. I have my old boss used to say that if you look at car companies, they tend to start building the E-Class or the 7 Series first, and they get everything built out there. And they're like, okay, we can scale this part up, and now we'll eventually make its way down to the C-Class or the 3 Series.
It's Tesla, right? Started with the Roadster, went to the started the high end, worked its way down with the vision of the 3 being the.
So you build out everything, like the price isn't going to matter, and so we're just going to build it, and then we're gonna push it down. And in some ways, if you think about what fintech's done, it's the opposite. Fintech in a lot of places has started with just like, we're going to start with basic mass market things that are sort of the simple use cases, and we're not going to really get into when somebody has a really complex treasury management relationship and participation loan and those kinds of things. You're starting to see more companies think about that, and more fintechs think about that. Obviously, banks that are in the space are looking for technology opportunities. I mentioned earlier our treasury management team is doing some really cool things with their technology stack. I think we're going to continue to see more of that as we sort of see people solve problems. Once a problem is solved, once we understand how to create better tools with fintechs for large corporate and treasury management type companies, you're going to see that get pushed to the market quickly. There's a huge value add from it. And so that may take the form of process automation and orchestration all the way through the lending process, all the way through to how people actually handle their cash flow. which is really interesting. So I think that's one that we're not quite really in yet, but I've seen some really early stage companies doing some cool stuff there on the money movement front for large corporate to help speed things up for money movement so that they can take advantage of having the money where they want and then integrating that all together into really tight solutions. I think we're getting into.
That's fascinating. I certainly hear a lot about data and insights, and I think that's just like a common theme for my conversations. Risk. The large commercial relationships is a different one. I'll ask you one more question in this space, and then we should let you get on with your day. But of your three modes of interacting with fintechs, right? The venture, I get the banking as a service makes sense. The partnerships makes a lot of sense, but I'm curious how you think about that as differing from. In some ways, I feel like everything old is new again. Like fintechs that are partnership opportunities are kind of like old school. They're not old school, but the relationship can be either more of a partnership or more of a traditional FIS, Fiserv, Jack. I mean, it's like they're a technology provider in many ways to a bank. I'm curious if you think of managing those relationships, finding those partners substantially differently than more established technology players? Because I think some of those guys get really upset. Like fintech's so sexy. Like we've been fintech for 30 years, 50 years. We've been fintech. Do you think of that kind of newer company fintech partnership model where you're talking about bringing something in to solve a problem inside the institution or take advantage of an opportunity that's harder for you to do internally as substantially different than your more established technology player relationships in important ways? Because they are in some ways very similar, right, to how you would just buy a legacy core system and partner with that individual. So I'm just kind of curious how you think about the difference between fintech partnerships and more established technology vendor type relationships.
Yeah, so I'm going to pull a weird analogy for this.
I like it. I like weird analogies.
Topical for this, and the timing is funny. I was talking to somebody the other day that didn't realize, didn't know Margaritaville was a song. They just knew it was a restaurant. And so I was explaining that the idea of Margaritaville is a state of mind more than anything. It's a state of mind. And so partnership is a state of mind. That's where I'm going with that. Like there's not like a magic sauce in talking to Jack Henry or FIS or Fiverr First Data or Finxact or Aperture Savannah or anybody specific. There isn't just a magic to the fact that they're, by virtue of their person. It has to start there. It's an attitude and a mindset that you have to be in. I have in the past worked very closely with FIS, First Data, Jack Henry, all of those companies on projects and done some cool things there. I think when we look at our partnership model as part of the fintech strategy, we're saying we see that there are new capabilities emerging. We see people getting to market really quickly with things. We see that customers are very delighted by some of the new things that come to market. And what should we be learning from that? What should we be taking back into the bank that we need to be able to provide this reliable, long-term, we're a 160-year-old company, give or take. And so we need to be able to think in a very long-term type way about we're providing you stability and security and structure. And also, we want you to be happy about what you're being provided. And there are companies that seem to be very good at that. And they seem to typically be companies that are more in the fintech bucket of emerging fintech than maybe established fintech. And so is there a mindset there that we can work with them both to internalize the mindset in our own company and also to take some of those capabilities to market to both solve our problems internally, whether it's just making something run more smoothly or in a more modern way or be up 24/7 because it's not on a batch process or whatever. And then also take it to our clients and give them the advantage of it and think in new ways on behalf of our clients and in partnership with our clients. So I think it's a mindset. I think it has to start there. I think in some ways there's a reality that a company that is 5 years old has a different set of priorities than a company that is $800 million in revenue or something like that, and they're going to just approach things differently. And so when you say, hey, we'd love to be in your next cap table in your next round, and we'd also be interested in taking your product and solving this specific problem, would you sit down with us for the next 3 months and think about what the architecture of that would be? There's a different idea of what that can look like with companies that are a little bit younger. Yeah,
I think in particular when you combine the venture investment. Yeah, there are.
By the way, there's a lot of smart people working on these things, and it's getting more smart people engaged in the process that care a lot about the well-being of our clients and the industry and that kind of thing. That's really valuable.
Excellent. Well, this has been a fascinating conversation. I feel like we could keep going forever. We haven't even gotten to Memphis, which is where you are and where I grew up. So,
Actually, I'm in Raleigh, North Carolina.
That's right. You are in Raleigh, but the
in
bank
North
is
Carolina.
in Memphis, right?
The bank is in Memphis. Yeah, the bank's headquartered in Memphis. We're Memphis. Iberia was Lafayette, Louisiana, and New Orleans team. So there's a lot of people still there.
All around.
A lot of the VirtualBank team is in South Florida.
How are you guys doing the virtual? I mean, not that I do want to get to the last three questions, but how have you guys managed the transition to virtual world through COVID, go back to office? I feel like, particularly in the context of virtual bank, it's probably an interesting conversation because you don't have to go back to the branches, which is certainly a forcing function for many institutions to go back. But where are you guys at? It sounds like you got a very distributed team for what I'm used to in many financial institutions.
Yeah. Yeah, absolutely. I mean, I think we were somewhat set up successfully for that because we were bringing companies together where people were distributed. Iberia Bank has a long tradition of bringing banks together and having people all over the place. So that was helpful. And then PPP, speaking of forcing functions, the PPP process where we were all working from home. I worked a lot on that, and we had a lot of people that really put a lot of effort into solving problems really quickly and thinking well about it. Technology and virtual solutions, and people were working from home and then just interacting like we were sitting next to each other for a few weeks, especially early on in the PPP process. So that was a great example of how people were like, okay, well, this is how we're going to work now.
Yes, it steepened the learning curve, I imagine, PPP, but also in somewhat of a positive way because to forcing functions, you had to figure out how to make it work, and then you kind of probably built some processes and muscles that were good for the longer term.
Absolutely. Yeah.
So I typically end this podcast with the same three questions. So I'm gonna throw them at you now, a little bit rapid fire. I hope you read them in advance so you know it's coming. But number one was what's the best piece of career advice you've ever gotten?
So I'm going to break the rules here.
There's no rules. There's no rules here.
The first one is my great aunt. When I was 9 years old, one time I was nervous about talking to someone that we saw in a museum, and she got down like eye level with me and said, "Tyler, everyone puts on their pants the same way every morning. You and the Queen of England." And I took away from that, like treating people always, no matter what they're doing, as important by virtue of being a person, and their individuality matters, and they're important as a human first and foremost. And that's really where it stops, and you treat everybody else the same based on that reality. That's been really important to me in my career because I try to live that out. The second piece is my mom, when she dropped me off at school, every single day that she dropped me off at school, because I'm a bit of a talker, as we've gathered in the last 40 minutes or so. Every single day when my mom dropped me off at school, she would look at me in the eye and kind of like begging me more than telling me, she would say, "Please be a listener today," because I talk so much. And so she still says that to me when we hang up the phone. But I think being a listener is another one because you learn a lot more when your mouth's shut and your ears are open. So those are the two.
I like that. That's the second person this week that's given me that piece of advice to listen more. So I don't know if it's targeted to me or just general life advice. But I'm not supposed to talk on the podcast. This is about your perspectives, not mine. So my second question, what's the best piece of advice about consumer lending or consumer banking you've gotten since you've been in the industry?
Yeah, I think that's actually a harder question.
It is a hard question. I kind of think I don't know what I would say if I were asked, so I feel bad for asking it, but I get good answers. So.
Yeah, but I think it kind of goes back. This is so fundamental that it's borderline cliche, but it's listen to your customers. And there's two implications that I've always taken away with that. I've worked a lot on strategy plans in the past. And where you oftentimes start with the strategy plan is know what you need for your customers to be. And so if you're hearing from people that your products don't make sense to them or it's not aligned with them, like, are you even talking to the people you meant to talk to? Have you built products for a whole different set of customers than the customers you have? And you really need to understand who your customers are, what you want to be when you grow up, if you will, and what they're telling you about that, and be open to that. And so that applies, I think, in consumer lending and deposits, in any kind of consumer interaction, especially because consumers are not monolithic. There is a whole different segments. I mean, there are segments on segments on segments here of how people expect to interact with their bank, what they're looking for, what problems they're trying to solve. And you have to really present clearly of here's what we are and here's what we're not and here's what we're trying to do, set the right expectations, deliver on that, and when you learn a lesson, learn it and go apply those learnings. So it's probably much more broad than consumer lending for sure.
Yeah.
But I think really applicable.
I think very prescient from somebody coming from strategy, because strategies, in my experience, where that often goes upside down, where you say, this is what we would like everyone to want, because this is what strategically would fit into bank's long plan. And then it turns out maybe your customers don't want that, don't need that. And so flipping that around, I think, is really important. And good coming from a strategy guy, because I think often strategy is where you go, no, this is the way we want the world to fit versus what the world we actually have to work with.
And I think you do have to deliver a vision. Like I think delivering a vision to the marketplace is important, because that's how you can really tell people about something they may have never imagined. Or clearly somebody may look at it and say, you know what, this isn't for me. It's for somebody else. It's solving somebody else's problem. And that's okay too, because you don't want them trying to solve problems that you can't solve with your products. So I think it's really understanding that dynamic that's important.
Yeah. All right, my last question. What's a bold prediction for the future? This is my favorite, because people go all sorts of ways with this.
We could go a lot of different directions with this, but I think that a bold prediction for the future of consumer lending, I'll start with just consumer lending, is that consumer lending will be even more point of sale oriented into the future. So on, a long-term bet on this would be that in a few decades, people buy their house by scanning a QR code, and everything else takes care of itself, and just shortening the timelines significantly. Which probably, the other maybe part of the bold prediction is I don't think it goes to people just going willy-nilly. So my real bold prediction for consumer products in general is that actually people don't want all the speed that we give them sometimes. And we give speed because we can press the pedal to the metal, we do. But sometimes people want a little friction, but people just don't want the friction where it is today. They don't want the friction, the approval process, which means somebody else goes and pays all cash for the house and they lose out on it. What they want is a process that helps them know when they go to buy the house, it's the house that they wanted. So how do you introduce time into that versus time into getting through the process of a mortgage loan? Or, how do you introduce time into planning for your future and what you want to do, where you want to go on vacation next year, and building the financial plan around that, versus having to spend a bunch of time moving money back and forth and looking for micro deposits and all of those little things that are just the tactical pieces. So where we can speed up the tactical, great, but it's so that we can add time into the strategic, in the customers, in line with the customer's goals.
Shift the time from the tactical to the strategic. I love it. That's beautiful. It's a great way to end the discussion. So I'll just say thanks so much for joining me today. This was a fascinating discussion, and I appreciate you taking the time.
Yeah, Jeff, I enjoyed it.